Kersley. I'm the Executive Director for the Sherwood Chamber of Commerce. Thanks everybody for joining us this morning on our first of 12 monthly sessions that we'll have starting today and proceeding through June of 2021. Our calls will always be the third Thursday at 10 a.m. of each month. And we've got the first 5 sessions planned out with topics. So you can read about those on the Chamber website. We're still working on developing the other 7 sessions. If you have any thoughts or suggestions of topics that would be helpful for you, then please let us know that. We're happy to take suggestions. Want to thank Shannon Mitchell, who will lead our presentation this morning from Banner Bank, and Bruce Coleman, who is co-hosting this session with us. Bruce is the Economic Development Manager for the City of Sherwood. And so I thought to start and to perhaps stall another minute or two in hopes that we get a few more of our pre-registered guests to log in, that for everyone else that's on the line, if just give you like 30 seconds just to introduce yourself, say, give us your name. And I'm assuming most everybody's going to be coming from the Portland metropolitan area, but it would be interesting to know which part of the region you're calling from. And if there's anything you'd like to share about what prompted you to join the call, if you have a project or anything that you're interested in learning more about that this session might help you with, and you're willing to share that, we'd love to hear that. So I'm gonna pick on Kristen first, if she doesn't mind, because she's actually here locally in Sherwood and is actually a member of the Chamber Board. So we appreciate her joining us today. So Kristen, go ahead.
Yeah, thanks, Corey. So my name's Kristen Leichner. I work for Pride Disposal and Recycling here in Sherwood, and as Corey said, I am a Chamber Board member. And in terms of potential projects, I would say we constantly are working with our bank on a variety of loans for equipment replacement. We purchase about 3 to 4 new trucks every year to just constantly be upgrading our fleet and then getting rid of our older trucks in that process. And we are currently changing all of our fleet to compressed natural gas. We have about 40%, or well, about 60% of our fleet now is natural gas. So anyways, I figured this was an opportunity for some personal business development and figured I might pick up on a few things. And so that's why I'm participating today.
Excellent. Thanks, Kristen. Brandon, do you want to go next?
Absolutely. So my name is Brandon Sanders. I actually work for Banner Bank, and I joined just to listen to Shannon because I know she is a wealth of knowledge.
Okay. Excellent.
That's correct.
David, you're in the same boat, I'm guessing.
Is that me?
Yes, yes.
Oh, sorry, yeah. David Rothy. I live in West Lynn, and I work in the Lake Grove branch of Banner Bank. I also wanted to join. I'm working for Shannon. She has an ability to bring a whole bunch of things together and present them concisely, and I enjoy her presentation. It certainly gives me perspective on what I know and adds to my repertoire. So I'm looking forward to hearing her again. This is the second time I've been able to listen in, and it's been a positive experience. So I'm glad to be here.
Okay, thanks, David. Bruce, you want to add anything, and have you any
Sure,
announcements or anything you want to say?
As Corey said, I'm Economic Development Manager with the City of Sherwood, and the City Council has made it very clear that economic development is their #1 priority. They really mean public safety, of course, but that's a given in Sherwood. So I'm very focused. I work in partnership with Corey at the Sherwood Chamber. I'm very focused right now on assisting our businesses in the recovery related to COVID-19. But we're very focused also on growing our existing businesses in the community and attracting a new business. We're very excited about the amount of new corporate park development that's in process or underway on the eastern side of Sherwood, and very focused on working to encourage the growth of our local economy. So delighted to work with Banner Bank, and we appreciate Shannon very much. I think I met Shannon at the Defense Coalition Industry meeting. I forgot how it's pronounced, PNDC, if I'm not mistaken. And I appreciate you doing this, Shannon. Thanks.
Okay, and I will add my thanks as well, Shannon, for your willingness to lead us through this presentation and at least the next 5 or the next 4 presentations as well. So with that, we'll turn it over to you. You can do an introduction to Banner Bank and yourself if you want, and we're anxious to hear what you have to say. And then after she's done, we'll open it up for some Q&A for Shannon at the end. So, all right, go ahead, Shannon.
Absolutely. Thank you so much, Corey and Bruce, and the City of Sherwood and the Sherwood Chamber of Commerce for allowing us the opportunity to present this loan readiness workshop information. What we'll be covering today is kind of the value of viewing your business through a banker's lens. As Corey mentioned, my name's Shannon Mitchell. I am a vice president and our business banking team lead here in the Portland metro area. I lead a team of business development bankers that specialize in helping businesses really accomplish their goals and dreams through financial initiatives. You know, I put a quote here, it's amazing how much can be accomplished if no one cares who gets the credit. And that's really kind of my motto. At the end of the day, it's not about whether you work with Banner Bank or myself. It's a matter of having as much resources out there available for you and your business to truly accomplish what your goals are. So with that, we can just dive right in. For context only, so you do know that I have the expertise to speak on the topic, let me set the stage a little bit so you know a little bit about myself as well as a quick snapshot of Banner Bank. We started 130 years ago with core values that have never gone out of style. We listen, learn, and help people reach their goals. We're nearly 13 billion in assets with more than 200 locations between Oregon, Washington, California, and Idaho. We have approximately 2,200 employees. We're financially strong with excellent capital levels, as well as an expert in serving businesses in our markets, as well as being an SBA preferred lender. Specifically, the SBA named Banner a star performer for Oregon for the past 4 years in a row now. Now more than ever before, we can meet all of the finance needs of businesses and families across our footprint, including right here in the Willamette Valley and specifically Sherwood area. Personally, I've been in banking for 10 years, starting my career initially with Northwest Farm Credit and going from there. I again started supporting the rural ag community and continue to love to support the small business ag community and small to medium-sized businesses throughout our market. It may sound corny, but there's nothing I enjoy more than helping a business owner accomplish their goals and dreams through financial support and education and advocacy. Banner has been serving the Northwest for 130 years, as I mentioned. Since you might not know about Banner Bank, I did want to quickly flash a few names that you would recognize, not to brag, but rather to ensure that you know that we're a well-respected, well-known financial institution. And the information I'm going to share with you today is based on a long history of serving businesses of all sizes. Let's get started. Again, success is not an accident. Planning for the next phase of your business may require capital, and the planning associated with that will typically directly result in successes. As a banker, I know some small business owners feel uncertain approaching I've heard owners say often that they feel bankers don't give them the attention they need because they're not, their business isn't big enough or they're not good enough to be served. And that used to be true. And it is true for some banks out there that aren't structured to serve smaller businesses in a more individualized way. It is important to know, though, that that's not a representation of all banks. In fact, businesses in our area have a great options of where to bank. I believe I work at one of those banks, but today isn't about Banner Bank. It's about you and sharing information that will help you and your business succeed. As you're planning your next moves for your company, your banker is there to help chart the course. For most companies, it's just about each major milestone for a growing company is capital intense in one way or another. When a business is ready to take a major step, it often means that you as the business owner or team members of that large business, you've oftentimes been working behind the scenes to leverage your own cash flow while maximizing your revenue. Your banker has solutions that can help you at each stage, though, whether it's capital intense or resource rich. First of all, don't underestimate, don't underestimate your value. You deserve a banker with the ability and availability to serve you well. If a banker isn't sincerely interested in understanding your business, that's an important sign. We call it relationship banking for a reason. To really benefit you and your business, it should be an ongoing relationship. A loan is often the start of a banking relationship. It really should just be the beginning, and that relationship should continue to add value to you and your business for years to come. Some people even use the analogy of choosing a banker a bit like dating. When you're first getting to know one another, you should both be very interested. If it's one-sided, that's generally not a good sign that it's going to be a good long-term working relationship. Don't feel like just because you chose a specific lender that you must do that for fear of getting a loan or needing a loan. Generally, if you qualify for a loan with one lender, you'll also qualify with another. How much guidance can a business expect reasonably? Reality, gone are the days when the largest businesses have access to a team of financial experts and a range of tailored solutions. In today's economy, you deserve financial experts who will work hard with you to learn your business and proactively offer customized solutions to assist you and your management team. It's fair to expect that your banker should meet with you at least annually to see how your company is doing, how well the bank team is meeting your needs, as well as bring new ideas and solutions to the table for your business. Personally, I'm in touch with my clients, and I know my team is in touch with their clients more often than annually. But again, that just depends on the expectations that you set as well as your banker sets. Bankers spend their days looking under the hoods of businesses, so we can be a great resource. When you've encountered a challenge or are thinking of taking advantage of a market opportunity, your banker wants you to succeed. So again, they're already on your side, and they can help offer additional ideas and solutions to tailor to that new opportunity that you may be faced with. In my opinion, this should be a relaxed visit during which your banker truly listens to your perspective. Listening here is key. If your banker is interested in speaking over you or about themselves or their experiences, that's probably a good sign that they're not interested in you and your well-being, and that they're more interested in their own well-being. I think that this should be at your place of business, because a banker can learn by a lot by visiting your facility. And again, in my experience, being on site and in your facility often expands dialogue and even solutions that you may not be thinking about. Ideally, your banker will also meet with you, your accountant, attorney, a risk manager, and any other key external partners periodically to help guide your business. Getting these experts together is like putting together all of the pieces of a puzzle. When we're all together, the picture of what we're building is the most clear. Another key factor is to be an accessible anytime resource for you and your business. Coming back to that last bullet point of connecting all of your key advisors, that's something that we'll talk about on the next session, which is a panel discussion. But again, making sure that your key advisors know who they are and have the authorization and permission from you to communicate on your behalf. When your banker requests a set of financials from you, They can also CC your accountant on that email, or you can just forward the email to your accountant and CC the banker and ask for that authorization. That takes so much time and effort off of your table with regards to you having to work on compiling those financials when it's something your accountant can just drag and drop into an email for your banker. In order to make valuable recommendation, your banker needs to know you and your business. I cannot be more clear about this. This is 100% probably the most crucial. This gets back to some of the earlier points that were mentioned about those regular visits, checking in, and frankly, again, the desire to want to be part of your business. When we get to this type of action that can truly help you save money and increase your cash flow, etc., it's more than just a loan. Any well-capitalized bank can provide a loan to you. A knowledgeable, experienced banker will want to serve as a resource for you and your business. With that team of financial experts to draw on, your banker, again, should be able to offer additional solutions and streamline the way that you're working. Your banker should be wanting to improve your efficiencies and decrease your challenges or headaches that you may have with any banking hiccups. It could be as simple as a check scanner when you're running deposits to the bank on a daily basis or a bi-weekly basis. Or maybe your routine is to collect all of your checks that come in Monday through Thursday and make one deposit on Friday. You are now floating those funds for your clients instead of having those funds go directly into your deposit account and giving yourself the access to those funds. So again, your banker should be there to help you find ways to work smarter and not harder, which in return allows you the ability to put time back into the areas of importance, like generating revenue, growth, or maybe even succession planning, depending on where you are in the life cycle of your business. So let's talk a bit more about lending, loan types, and criteria for qualifying for a loan. What type of funding do you need? Here we have a few different examples of some major differences between these items. So short-term versus long-term financing, what that looks like is, is the property that you're buying or the equipment that you're buying, is it equipment? Is it real estate? What does that look like? And what type of financing is it realistically best structured around? So short-term, we would consider more to be, depending upon the structure, it could be 12 months or it could be 5 years, whereas long-term financing is more like 5+ years. Is it a loan versus a line of credit? This is also crucial. A lot of business owners think that having a line of credit is okay and sufficient to put a capital expenditure on that. We never recommend, though, putting a long-term asset, like a piece of equipment, on a line of credit. And what that does is it actually eats up your capital and doesn't give you the ability to truly utilize your line of credit as you should. Your line of credit should be there for short-term needs to help support your cash flow. If you think about what you're financing on your line of credit, you don't think that you can reasonably pay that off within 12 months, then you should likely look at a loan structure for that purchase need or expense. Conventional lending versus SBA. Again, SBA lending there are higher fees associated with it, but if you're in the startup phase of your business or you don't have enough money to put down towards a property, SBA is a great option for you. And then again, property versus equipment, which we kind of talked about. So hard real estate versus more like a vehicle or a work truck. The other thing that property could be included within that is a long-term fixed asset on a piece of property. So coming back to my agricultural lending days, and my ag background, if you are improving the property with a permanent fixed asset, such as a pole barn or maybe irrigation equipment, that's going to then be, again, attached to that property. While it is equipment, it's still technically a fixed asset to the property. So looking at all of those options and strategizing that with your banker should be able to make recommendations to meet your needs. Small business, commercial, and agriculture lenders typically all require a borrower's primary and secondary sources of repayment be equally strong. This is, again, another big talking point. A primary source, which is typically cash flow for short-term loans and earnings of the business for long-term loans and credits, those should be supported with some form of collateral. The collateral in most cases is the secondary source of repayment. Again, the secondary source of repayment is not necessarily there to approve the loan, which is why you need that primary source to really be coming from your cash sources. The secondary source would be in the event of default, the bank would likely want to take that piece of equipment back, similar to a repossession on your personal side. Then to further support the credit, the bank will usually always require a personal guarantee, which provides additional fallback in the event that the original plans fail to materialize. So worst case scenario, if your business does not follow through or work out, if you have a startup and it doesn't work out and successfully flourish into the business that you had hoped, you are still personally liable for the debts that you personally guaranteed. Banks, in most cases, want the reassurance that you, as the business owner, are committed to the success of your business, which is why your personal signature on that guarantee shows that you, as the business owner, are also putting total support in to this business and credit. Again, if you're coming to the bank for a loan and you want the loan from the bank and the bank to take your word on your idea, then you also should be willing to sign on the dotted line. It's very hard to find a lender, especially right now in the times of COVID, who will do what's considered a non-recourse loan, which means it's a non-personal guaranteed loan. As I mentioned, again, why would you ask your bank to take the chance on the credit if you're not equally adding your financial support as the business owner? Thinking through the banker's questions will also help you prepare for the application process, and you can use the underlying principles to foster stability and even strengthen the business for long term. These are some of the questions that you should expect from your banker: the purpose of your loan, source of repayment, what's the collateral available. Right now, again, pieces of equipment are good collateral. I would say that the most valuable and the collateral that's holding the most value across the board is going to be real estate, since, again, COVID has brought in a time of uncertainty to our industries across the board. No one's really safe from that concept. At the core of these questions are always going to be the 5 C's of credit, which are noted here. These are still the foundation of credit decisions across the board. This is not a new slogan. Character, capacity, capital, collateral, and conditions. Those are all things to think about as you're preparing to apply for a loan or prep your business for loan readiness. Character, again, goes to the very heart of the deal. As you are you a trustworthy person, and or is your business reputable? How is your personal credit score, and what does that report look like? Are there any derogatory information items such as collections, liens, or judgments on your report? If so, you should upfront share that with your banker. The hardest thing for a banker to overcome is challenges that were not disclosed up front. You should not be shameful of credit challenges of the past. The more your banker knows up front, the more they can, again, help you succeed and help you overcome those hurdles. So again, you know, just having that open dialogue, if you trust your banker, you shouldn't feel bad about sharing negative items or feel like there's going to be judgment by sharing those things, because again, it will come out. If you're applying for an SBA loan, the 1919 SBA form is a background check. And what's that going to look like? Are we going to find out that there was at one point a felony from when you were 19 years old, or anything alarming that may pop up? Because again, it's a federal loan and it requires a federal background check. Everybody does make mistakes and has things happen throughout their life. So being prepared to discuss them and help your banker mitigate them proactively instead of reactively is always very helpful. Capacity. What is the current and historical financial strength of your business? This, again, is very key in the times in which we are currently in as a result of the pandemic. Not only is it important to see that historically you've made your payments on time and fulfilled your debt obligations, but are there any potential financial challenges that need to be taken into consideration? What does the future capacity of your business look like? Again, restaurants right now are seeing a really inconsistent income flow. There are some restaurants out there who are thriving during this pandemic and have seen a triple increase in their revenues as a result of COVID, because they have been more of that food truck model or takeout model, or maybe grab and go food service with a drive-through. Those types of businesses are booming, whereas before, the restaurants that had more fine dining were probably making a bit more on the revenue side. Capital. How much capital do you as a business owner and the business have on hand? So this goes to talk about specifically cash on hand and any additional outside sources of repayment that may lie out there. How much cash have you already invested into the project? Tracking that is also key. If you've already had proof that you've put $100,000 into your project or property, being able to showcase that to your banker shows that, again, you have skin in the game. If you think about this in relation to buying a house, it's typically easier to gain approval for a mortgage when you have a down payment. It's no different when taking into account a business loan. Typically, business loans require or request 20 to 30% down, depending on the type of loan or lending that you're looking for. When it comes to collateral, again, as I mentioned, loans are typically required to be collateralized. Collateral is a significant factor in determining the borrowing amount and most importantly, is tied directly to that secondary source of repayment that I mentioned. Whether that collateral is accounts receivable, inventory or business assets, or a deed of trust on a fixed asset such as real estate and improvements, it needs to have the value to cover that secured debt. So when you run the analysis on your accounts receivable, we have to exclude certain items, and that can all, again, be discussed with your banker on how much value is going to be given to you for your accounts receivable or your inventory that you may have on hand. Overall, you can expect our industry as banking to set loan-to-value limits based on the type of collateral that's being offered. These limits can vary bank to bank, so be sure to ask those questions up front about what those limits are, and be mindful of caveats such as up to or conditionally when it comes to loan-to-value. That's, again, crucial. Just because it says that their standard loan-to-value is 80%, that's up to 80%, that doesn't mean that you're going to get approved for 80%. That could mean that based upon the type of collateral, the lender is only interested in approving 50%, which then again significantly changes that loan amount for you. Conditions. The economy today has a lot to do with a business success. So on the condition side, the questions that will really come up is it sustainable in the long run? Is your business able to withstand a downturn in any situation, and how is that supported? Are you selling or providing the right type of product or service? Are you service driven that could be easily outsourced or replaced? Again, conditions is probably, in my opinion, it's hard to stack rank these in area of importance. But with COVID, we're seeing right now, as everyone is kind of going fiscally conservative to make sure that their business is prepped for long-term success. Had you previously outsourced your marketing ventures, and now you're bringing that back in-house to reduce your cost by not using that third-party vendor. Those are all things, but if you're the third-party vendor, obviously that's challenging because you're seeing a negative impact as a result of COVID. Keep in mind, again, as you're seeking funding, the more information you can provide your bank, the better. Understanding your company overview, key players, best points of contact, and preferred method of communication are key to having a strong relationship with your banker and bank. If your banker doesn't already know your key advisors, it's also helpful to connect everyone together and give them authorization to work together on your behalf, as I noted. You have a team of advisors working for you. Let them make your life easier. I can't say that enough. As I mentioned, the example of connecting your banker and your accountant, if your banker needs financials, it is so much easier when that happens. And again, you as the business owner, you are the expert for your business and your field. You don't need to be the expert for banking, and you don't need to be the expert for your financials. That's up to your key partners. So let your bench of key advisors really go to work for you and allow you to focus on the things that are most important, which again is generating that revenue and keeping your business producing. Make sure to speak with your banker in general about this information on your company with the bullets noted. So products, just again, overall, your products and services. What market are you sharing? What market area are you covering? What's your distribution and sales coverage? Who are your customers and maybe major suppliers? Are there any competitions out there? What sort of facilities and number of employees do you have? Right now, if you're seeking funding, any bank is asking for an explanation of how you have been impacted with COVID, as well as did you receive a PPP loan or an EILD loan? Those are not negative things. That's your banker trying to showcase that you as a business owner are doing the right thing to set your business up for long-term successes. So again, the more you're able to share, the better. I'm not going to go through each of these, but scan this list and make sure you can provide all of this information if asked. Keep in mind, 3 to 5 years is good to have, but most lending only requires 2 to 3 years of financials. So if you do provide 5, your banker probably isn't going to look at your 4th and 5th year since it is so dated. Again, year-to-date financials and statements are also usually a requirement. That last item of a signed letter of agreement providing you open access to talk to your CPA. If you're not filing your tax returns and your banker has a question about maybe a capital gains or a net operating loss carryover, it's much easier oftentimes for your banker to get that information directly from your accountant because the accountant, typically has the notes and can showcase exactly what that was. Additionally, another example would be maybe at the end of 2018, you applied for a loan and you didn't qualify based upon cash flow coverage. If your banker and your accountant are communicating, your accountant may be able to work with the financials to showcase that you truly do have a higher net income than you do by maybe not writing off as many items as you did prior to. Remember, your banker, it's a relationship with your banker. So Honesty is always the best key from both parties. Don't be concerned that a bit of negative news will scare your banker away. When you share information proactively, we value your honesty, and it also helps set the stage for that open dialogue and trust. Again, if your banker makes you feel guilty by sharing challenges or negatives, then there's a chance that they're just not the right banker for you. Personally, I believe in my clients, and I want to do everything in my power to assist them. That said, I need to understand the full picture, including challenges that I may need to overcome before we find out about those challenges. Keep in mind that that consultative banker is going to look for ways to help you thrive, helping you find access to capital, and then in some cases, providing alternative solutions with a long-term action plan. In this case, again, recently I can speak to a decline that we had as an institution, and it was a red flag already. It was a business who was trying to expand and had a very aggressive growth strategy during COVID. And when I saw the financial request, I openly told the client, I don't know that this is the right time for you. We can still apply for the loan if that's your request. And at the end of it, upon the receiving the decline, the loop back around was still, hey, focus on the revenues that you have right now. You don't need to expand right now. You are currently meeting all of your client needs and expectations, and you can still continue to scale that growth on a smaller schedule without needing to open that third location. As a result, the client actually came back and thanked us for that. Now seeing that, again, COVID is extending out longer than we expected to, the client was very thankful that, again, we took more of the consultative approach and less of the approach of this loan means everything, because, again, it doesn't. We want small business clients and owners to succeed long term, not in the short term. As you're planning your next moves for your company, your banker is there to help you chart that course. For most companies, just about each major milestone is, again, capital intense in one way or another. When your business is ready to take one of those major steps, it, again, means that you are there and you have been there leveraging your own cash flow while still maximizing your revenue. Let your banker help you with setting the stage. They can help recommend ideas and strategies and, again, ways to really help your business with that next step. Some of the highlights that we covered today were, again, helping understand how your business looks to a banker, being prepared with your financials, as well as being able to showcase what your vision is for your business, and then meeting with your banker before those financing needs occur. It's okay if you call your banker and say, I'm looking at this property. Do you mind if we have a conversation about what the loan payments would be? Even if you don't end up buying that commercial real estate space or that new piece of equipment, your banker should be there to help support you and can help you take advantage of those market opportunities. Giving your banker advanced notice before you're pulling the trigger is, again, always key. How nice is it when you walk into buying a new car and you know that your bank has you pre-approved for that loan, you know that you don't need to hassle with dealer financing, you know that you know what rate you're at, you just want to buy the car, right? You then have more leverage to negotiate your loan amount, or excuse me, your purchase price, because you already have the financing in place and ready to go. It's the same for businesses. So just keep that in mind. Same with extending an offer on a commercial piece of property. You can proactively talk to your bank or banker about getting a pre-approval letter or a letter of intent to lend against that property that says that you're approved up to X amount, similar to, again, that pre-approval letter that you would have for buying a new home. That is all I have for you guys with that today. Do you have any questions?
Thanks, Shannon. There haven't been any questions on the chat. I don't know that we invited anybody to ask questions on the chat, but at this point, if you'd like to unmute yourself and ask, it looks like maybe Karen has a question.
Yeah, I look that way. Karen, go ahead.
Hi, thank you. First of all, I'm a Banner Bank customer. I have not received a call from my banker. Should I directly reach out to the retail store or bank that I'm with for that, or?
Yes, great question. So that's a really good point. If you have not been contacted by your banker and you want to have a conversation, you can do any and all of these things. You can call the bank directly and speak with somebody, or in this case, I think you mentioned that you're a Banner Bank customer. I'd be happy to call you after this call, or have one of our team members on the call reach out to you as well. But again, it could be that maybe the banker who you initially worked with no longer works for the company. It could be any of those things, but again, you should know who your banker is. And if you don't know who your banker is, I would say that that's a red flag. And if you do bank with Banner, I'm sorry to hear that. And we should do better for you.
Well, I appreciate that. I would appreciate receiving the slide deck. If you're planning on sending it out, that would be helpful.
Yes, absolutely. We recorded this presentation, and so I believe that Corey will be uploading it to the website as well.
Which website?
Yes. So
Bruce?
as soon as we get the recording, we'll make the link to the recording available on the Sherwood Chamber website. We'll send an email out to everybody that had registered so that you can have that link.
Thank you. I appreciate that tremendously.
Absolutely. Thank you for the question. Does anyone else have any questions, thoughts, anything that they're curious about? We had allotted for time until 12, so there's plenty of time if you do have questions that you would like to ask.
I've got a question. I want to make sure we get everybody else to ask questions first. Whoops, I don't think I'm on.
I think you can go ahead, Bruce, if you want to go ahead and ask.
Yeah, with you talked about obviously with COVID and some of the things that are happening from the health and economic crisis that we're in. I mean, you talked about one industry type, which is restaurants, and some are going to be, I guess, more bankable than others. Are there any other particular industry types that and I don't want to say you're favoring, but you think that are suitable candidates? I'm not talking about specific businesses, but suitable candidates that the bank looks at? Is it manufacturing of some kinds, or distribution, or e-commerce, or those kinds of things? What do you see as maybe the best focus right now for industry growth?
Good question. I don't think any industry in particular is safe with COVID. Yeah. I would say, this is, again, my personal opinion and not necessarily representation of Banner Bank, but me as an individual. I think that if we look as a big picture at those industries that are booming, like the takeout restaurants, and what's not booming, like travel, right? Travel is a big one that is taking a hit across the board. So what does that really mean long term? And really taking into account, what does that look like? Even something as simple as a tutor service that maybe used to tutor children on site that are now having to get creative and use web-based tutoring platforms. But how challenging is it to tutor a child with how to read from a web-based platform, right? So, I mean, that's where we look at across the board. Even dentistry and veterinarians historically have been the two least consistently, and as a national average, are the two industries that are least likely to default on a loan and least likely to go out of business during times of a downturn. Because again, everyone needs dentistry, and everyone wants to make sure that their animals are safe and healthy, right? Well, as a result, what happened with COVID? Dentists were told to close their doors unless there was an emergency, and not only that, turn over any medical devices or equipment that could help hospitals. So our number one least likely to default industry shut their doors for 3+ months. So I think that it's all that mystery magic ball, like look into that hourglass and try to hedge that bet and hedge what's going to come. I would say that if you are in the startup phase of your business or in the growth phase, really look at what that means long term and is it scalable. Obviously, if you're in the construction industry, construction was deemed essential in Oregon. However, construction was not deemed essential in Washington. So some businesses that support both the Vancouver market and southwestern Washington, if you had 50-50 business between Southwest Washington and Oregon, you now took a 50% cut or a hit on your potential income and revenues, even though those jobs were already guaranteed on your books. All construction came to a stop because it was deemed non-essential. So it's things like that. Again, as you're scaling your business, really think about what that looks like with this new norm. And I hate to call it a norm, but you know, this started at the end of February. It's now July. It's not going away. So how can we move forward with making adjustments to your business to continue productivity and profitability so you can in turn be still in business and hopefully thriving at the end of COVID? Maybe that looks like getting all of your employees set up and working remotely. If you have to be in person, what does that mean for locations? Do you have to have an on-site location as you're opening your doors? Or is there a way for you to scale your business with an online presence? Banking is one of those industries, I would say, overall. Commercial lending, small business lending is the old school mindset where you cannot get your job done unless you're in the office. You're expected to be in the office from 8 to 5. You can't help your clients if you're working from home or working remotely. And that, again, I mean, I have been in banking for 10 years. That has been the trend, and it has not changed. Well, personally, I work, and I know this about myself, I work better remotely. And I don't have distractions of going into the office and my peers and, you know, being able to just chat it up in the lunchroom. I'm more focused at home. As a result, I have personally been able to thrive during the pandemic with my successes, and some of my elders in the same industry, same bank, have had more of an adjustment to that because they haven't been as adaptable previously. So I think adaptability is going to be crucial in your business successes long term.
Thank you.
Just kind of a quick question, Karen, what type of business do you have? Oh, you're on mute. You're on mute, Karen.
Bruce, will you mute yourself, please?
Yes.
Thank you.
I apologize. My day job is I'm a executive recruiter, but my passion and my business is Navarre Gardens. You can find me at navarregardens.com. It is a wedding venue. I have over 14 acres, so I'm very socially able to socially distance. But given the nightmare, I managed to retain 80% of my bookings for this year and move them to next year. And so I've also opened a second Airbnb revenue stream and built an event center. So I'm poised for a great next year. But you know, the events, even the business strategic planning meetings, you know, everything's being curtailed. So I kind of got it on 3 levels. Weddings are out, corporate retreats is somewhat out, and of course recruiting isn't great right now. So I'm using the time to perfect everything, to get everything fine-tuned, and this presentation actually was very helpful in that. There are things that I need to do. So thank you, Shannon. I appreciate that.
You're welcome. And I do think that, again, that's helpful, but also something to think about as weddings aren't stopping, right? They might be delayed, but they're still happening. And so if you do have this 14 acres, maybe something that you work into your business plan for the next 6 to 8 months is social distancing tables and how to watch a wedding ceremony, from a safe distance. So again, thank you for sharing, and I wish you the best. Mr. Elliott, would you mind sharing kind of a little bit about you? We did this at the beginning, and I know you guys logged in a little bit after we started. So if you wouldn't mind sharing kind of a bit about you and your business.
I don't have a business, but I've always, my wife and I have always thought of having a business, and that is having a farm, that kind of a small farm. So that's been always a desire. So just interested in what you had to say.
Perfect. So. Well, thank you for joining. And again,
yeah,
my information will be available as well. So if you ever want to talk about what that looks like or ideas to consider, definitely don't hesitate to reach out. I am available as a resource, and like I said at the beginning, I love this stuff. So if I can help any one of you guys reach your goals and dreams by adding a little bit of help, even if you don't work with me directly or Banner Bank directly, don't ever hesitate to reach out. It's just something I love. Yeah. So again, does anyone have any other questions? Kristen, I know at the beginning of the call you mentioned you were kind of strategizing as you were working towards additional financing for your business. Do you have any questions for me or around this presentation? We can't hear you if you're speaking, or I can't. No.
Can you hear me now?
Oh, yes, now we can.
Okay, sorry about that. I had taken my headphones out, and apparently my computer speakers don't work without them. But no, I don't have any questions. Thank you for checking in.
Okay, absolutely.
I have a question, yeah. Shannon.
Go ahead.
I was wondering if you could just kind of walk us through, once the application gets into your hands as the banker, where does it go from there? Who else gets involved in this process? And you talked about some of the 5 C's, and in a lot of ways, there's a lot of judgment that happens there. Who's the judge, and are you the advocate? Are you part judge, or do you have a say in that? Or kind of walk us through that process.
Great question. Thank you, Corey. So your banker should be your advocate, and they should be in your corner. Your banker helps present your request for financing to the underwriting and essentially decision makers. Your banker may have a small lending limit depending upon who you're working with and what your needs are. In most cases, though, your banker who is again there to support and guide you in your business, they again can only help represent your message to underwriting, which again is why it's kind of needs to be very clear with what your goals and expectations are and what your real needs are. Because if you don't decipher those needs well enough to your banker, then that can get lost in translation when it gets to the underwriter. What's interesting, and you bring up a really valid point, Corey, what's really interesting about the process is that when your banker presents your loan request for approval or for decisioning, the underwriter they don't know you. They don't know you at all. They only know what the banker tells them in a Word, typically like in a Word document or an email format. So again, it's the banker's job to actively and proactively articulate who you are as a business, what you're doing, what your goals are, and again, hopefully overcome proactively any objections that may be out there. If that doesn't happen, if we as bankers leave the underwriters to make assumptions about your business, that's never a good thing. If I look at a credit request and I have a bunch of questions, I don't recommend that that our banking team submits that. We should be able to actively respond to those questions and improve our write-ups so underwriters can just look at something and fully understand what the request is and what that looks like. Some banks have different processes. Every bank has a different process, I would say. With Banner Bank, when we how we work on our business development team, we specialize in transactions that are $1 million or less. And then we have a group of commercial bankers who focus on our business lending that's $1 million or greater. So on our business banking team, with those requests $1 million or under, once we receive a financial packet, it's our jobs to review your financials, make sure you qualify from a cash flow perspective for the loan that you're requesting, and then furthermore, make recommendations to you. Maybe your request was for $1 million, but you only qualify for $800,000 based on that initial look. So it's your banker's job to come back and say, I'm not sure we can get you approved for $1 million. I'm confident we can get you approved for $800,000. Why don't we go ahead and submit for like $900,000 and meet in the middle here? Again, it's your banker's job to make recommendations based upon what they think realistically an approval would look like. Hypothetically, not hypothetically, but how our team works is we should make those recommendations and recommendations of how to proceed prior to submitting your loan, because we want to make sure that you are comfortable with the request and that you understand what that request is going to look like. It does not make sense to submit an application and pull your credit just for the sake of doing so. Again, that's your banker being in your corner and really being there to help tailor to your needs and your goals. I had a conversation with a gentleman yesterday who shared with me that his personal credit is very low as a result of some credit card debt and credit card charge-off debt. And my unfortunate recommendation and advice was continue working with the cleanup agency that you're working with right now to help clean up your personal credit. And until that happens, likely it's going to be very challenging for you to obtain business lending as a result of your personal credit. And that comes back to, again, that personal guarantee component. If you personally have active past due payments, that does not help your case and your ability to showcase that you're going to be able to make your business loan payments on time either. So that kind of comes back to the the character component as well as capacity. So, and I mean, alternatively, we also have some clients who may have $1 million in the bank with Banner Bank and are oftentimes delayed on their payments. Why? Because they're busy running their business and their banker didn't accurately set them up on auto pay from the beginning, right? So it's just stuff like that where it could be you just forgot about this Macy's credit card that was lingering out there. You have no idea about it. And then the next thing you know, your banker pulls your credit, it's in collections. Now, again, a way to overcome that, if you have the proof or the ability to pay it off, go pay it off. Dispute the credit card, charge off on your credit, showcase to your banker, this was obviously an error. They had my old mailing address. I didn't know it existed out there. I mean, I've seen a Macy's credit card charge off with $39 on it. $39. Obviously this was an error in some capacity, right? And the initial loan request was declined because there was an active recent charge-off for a $39 Macy's credit card. But alternatively, the same business owner had otherwise perfect credit, and they were able to pay that collection off, dispute it, show us proof of payment, show us proof of escalation, and we were able to overturn that decline. So, so long-winded answer, but it's, again, your banker's responsibility to showcase to underwriting and to leadership what your goals are and how you're going to be best represented in the long run.
You mentioned personal guarantee. I had a question about that. Does it matter whether you are set up, your organization or company is set up as a corporation versus an LLC versus a sole proprietorship versus a nonprofit? Is that personal guarantee always going to be part of the requirement, or does the corporation status matter?
Good question. Yes, it does matter. The only time I would say right now that you would not necessarily need to personally guarantee would be if your business is a nonprofit. Nonprofits typically do not come with personal guarantees. Now, that said, I have worked with nonprofits in the past that have come with personal guarantees to strengthen the credit because of the initial growth phase that the nonprofit was in. We did need added support in order to approve that request. Otherwise, I would say, especially based upon the pandemic, I would say it's a very easy answer to say that 99% of the time we will require a personal guarantee. An example of a business that would not come with a personal guarantee right now in the time of pandemic would be Amazon or Facebook or Google. Those large companies would not necessarily need a personal guarantee. However, I don't know what their finances look like, and their bank may say that they need a personal guarantee from Zuckerberg, right? I mean, I have no idea without looking at his finances. His bank may require personal guarantees from him. But, you know, those are the types of examples of businesses that would not, you know, those large corporations would not likely have a personal guarantee associated with it.
So on the same note, sorry if I'm monopolizing the questions here, but just another follow-up to that same thought process is, for someone who is thinking about starting their own business, like Mr. Elliott or anyone else, I know one of the big decisions you have to make is, are we an LLC? Are we a sole proprietorship? Are we a corporation? How much influence or help can a banker be in that process? Are you the right one to ask, or is there somebody else that they should go to for recommendations?
Great question. Your banker, when it comes to organization recommendations, will in most cases only know enough to be dangerous. So your banker can make recommendations for you to speak with an attorney or an accountant. There is different tax implications associated with different formations. There's also, you know, you can have an LLC that is filing as an S Corp. And again, I only know enough to be very dangerous about that, but that's a tax strategy in order to do that. Additionally, your attorney can make recommendations to reduce your liability based upon your business model and structure that you have. So it's, again, key to communicate with your key advisors. That's also a great kind of plug-in, Corey, for the next event that'll happen in August. It will be a panel discussion between a banker, an accountant, and an attorney, and deep dive into why it's important to prep your business for success with the right bench players. You'll be able to, again, kind of hear the nuances of what an attorney looks at versus what a banker looks at. The banker doesn't care so much about the way that you form your entity, just that it is formed accurately. Or like kind, if you're operating as a sole proprietorship, that's fine too. But your banker needs to understand that upfront and going into your loan request. Your attorney will recommend maybe why it doesn't make sense to be a sole proprietor from a liability or risk perspective. And then again, your accountant is there to help support the tax implications of that. And there's a lot of nuances with all of that. You know, I personally own a rental property, and I now have an attorney because I have to. And that's because I want to make sure that if anything happens, I have a person I can call for help or support, or how to help me fill out the 45 pages of Multnomah property requirements that are now in place. Again, yeah, that's a great, I would recommend if you have those questions or comments that you have around additional questions on formation, definitely don't be shy to reach out to an attorney. If you need a recommended attorney, there are attorneys out there that do reduced fee structures for startups. And if you need any recommended contacts or points of contact, I'd be happy to get you in touch with some of those players. I think our presenter for the panel next month will be one of those individuals if he's available. So so that'll be kind of a nice showcase again of options that are out there that to keep your overhead low with those legal costs.
Thank you.
I got a question, unless Corey has more. No. So when you talked about a startup, so when you meet with a startup that's perhaps not ready for financing through a bank, Banner Bank, or maybe any other bank, do you then give them guidance or thoughts in terms of some alternative approaches that they should look at in terms of getting financing that they might need to get to a position where they could be bankable?
Yeah, absolutely. So again, that comes back to your banker should be making recommendations for what makes sense for you and your business, right? So like kind, the conversation I had with the gentleman yesterday who has challenged personal credit, I recommended that he find a silent partner or take out a private party note from maybe a more wealthy individual who might be interested in making 10% or 12% on, you know, a $50,000 loan out there. That's 100% something that people do all the time. It's kind of like, or find an investor. We've all watched Shark Tank. It's the Mark Cuban way, right? I will give you $100,000, but I want 20% stock in your business and 20% profits, or whatever that looks like. So there are avenues and approaches and resources for you. And that again comes back to talk with your accountant, talk with your attorney, talk with your friends and see if they know anybody out there. How did your friend maybe scale their business to the level that it is? It's not all from bank financing. If you also can't qualify for that business financing today, do you have enough equity in your home to take cash out of your home to fund those startup costs? Getting creative in your thought structure is crucial. And I think that some of the more community-based banks get more creative. Community banks, credit unions, it just depends on, again, what your needs are and who is best suited to serve you. I would say that Banner is a bit more creative and we can come up with those unique structures. I just approved the other day, or had an approval come over the other day, for a startup IT company. You know, that's kind of, but it's a startup. It's a full-on startup during COVID. And the reason is one of the owners / spouse, that individual's W-2 income covered all the debt payments on their own without any added business income, right? So that's an additional way to support a request. What is going to be the source of repayment in the event of default? And so when you kind of think that way and kind of strategize what that looks like, that's, you know, that's kind of thinking like a banker. How is the bank going to get paid back? And asking those questions kind of really help and guide that. But it is, again, Bruce, it's sometimes quite hard to find financing when you're starting out. And so oftentimes you do need to leverage your personal resources in order to do that. And that's okay. And that's something that, again, you should be willing to do if you believe in yourself and your business.
Thank you.
Does anybody,
Okay.
yeah, does anybody have anything else?
Okay, well, I think sounds like we're good then. So thank you again, Shannon, for your time this morning. Thanks everybody for joining in. And we will, again, make a recording of this available along with the slide deck so that you can go back and review. If you have any colleagues or associates or friends that you think might be interested in taking advantage of this, we'll certainly make this available for anyone who wasn't logged in today as well. So,
and please also remember, this is once a month. We're doing this series with Banner Bank, so we appreciate you joining us for the next one where we're going to have a panel. So thanks again, Shannon and Banner Bank and everybody for joining us.
yeah, I'll just say that initially when we talked about doing this, that the intention was to get together as a group and do this in person. Obviously, COVID has changed that thought process. So I would imagine that for August, we will probably continue with the virtual format. But, you know, depending on how this all goes with the pandemic, at some point we may start meeting in person. But for now, I would plan on continuing this in a virtual manner. So.
Thank you.
Elliot, did you have a question or comment before we log off?
Yeah, but well, I was just I'm curious to know more about the tech. You were talking about how you structure your bank or your business, and how the bank, you know, looks at that, and then finding an attorney. And you mentioned something about the tech. Something, I don't know. Anyways, that's a whole new, you know, when the bank looks at, like, if you're wanting to, for example, it's all, you know, you don't have any, you know, your sales are all online and that kind of stuff. So
Yeah.
I'm just, that's a whole new, that opened up a whole new idea, you know, and you know, where you can find a loan for starting an online business is, I just never really considered that. So.
Yeah, it's unique and creative, and again, you know, forward thinking, what industries are going to prevail and, you know, succeed long term, and what's going to be that need long term. So asking yourself those questions: what is your area of expertise? If you work in the IT field right now, maybe, you know, something like that. It's definitely, you know, if you walk away, do your clients come with you? Are you going to immediately have that revenue source? Are you buying into a franchise of an already existing IT business? You know, those are the things and strategies to really take in mind and into consideration as you're looking at options to open your own business.
Oh, I was thinking, you know, more for like, well, I don't know, just for the younger generation and how they think about starting a business and loans and those kind of things, and how that would, you think of the Shark Tank, and you're not selling, I don't know. I look forward to more conversation. That's all. So thank you.
Perfect. You're welcome. All right. Well, with that, thank you all again. I'll go ahead and end the recording, and we look forward to seeing you online in August.
Okay. Thanks, everybody.
Thank you.